Welcome traders to the February 15th, 2012 trading probability recap. We're going to go over the probabilities and the trade for the day, which was pretty limited today. We didn't see a whole lot of opportunity today. We had a tight small range balance again. Broke the highs higher, had a pretty low sample size, and then we hit lunchtime trade. We don't trade in the lunchtime. That's where kind of the big moves of the day happen. And then towards the end of the day, we tried to get a long off and chopped it out. Lost some commission, but overall, it just didn't have the opportunity today for us, for traders of the morning and afternoon, in the closed sessions, not that lunchtime trade. But for those of you that were trading, definitely had some opportunity in that lunchtime. We'll go through and talk a little bit about it. So gap trade overnight, we had some crazy news-driven action. As we were posting our video, we saw that spike up. Kind of talked about it a little bit when we're doing our video real time, but we'll go. We just have regular trading hours chart here, but basically we spiked up to 58 overnight. We had a plus 10. We had two minus 10s coming into the day, and so just a lot of news going on, a lot of chop. We opened up above yesterday's range at a 20-day high, which is pretty bullish. And so basically we kind of comment on the gap trade. Emotional market, we're basically passing on this gap. Look to go with a +4 or fade a -4 off the open. And so basically what we're looking at was just kind of to wait for a balance. We had a decent gap. We had a 68% win rate, 52% fill rate, profit factor 0.57. So it wasn't too bad, but given the context of everything, whenever we get those range gaps, especially at a new swing high, we're better off just to kind of let things balance out. Unless we get a really positive number. We have a 68 win rate, we have a 1.5 profit factor, something like that. Then we'll look to short it. But we went in just kind of waiting to let everything balance out. So going back here to the start. So basically we opened up here, immediately got a -10. So we got this selling volume. It was on huge volume, I think overall 51,000. So we got that selling balance, and you can see the market kind of holding it. And so we saw this as sort of some initiative buying. If you take it just solely on this candle setup, you get a engulfing candle, never taking it back. And so we thought that we get a little bit more selling volume and selling pressure going forward. But we basically came back here, filled the gap, ticked the high. We hit a -4 off the open, so that kind of put us in fade mode. And so we're looking to try to get opportunity to get in. And we just never could find it, and we ended up just kind of chopping around within a 5-handle range, probably more like a 3-handle range for the better part of the initial balance. And then the break came here. We had a +10 mid-range, which was kind of odd. We haven't seen those before. I think 2 buy programs fired off. It fired off a doji, and then just kind of got this low energy break up higher. Kind of just went flat dojied, and the rest is history. But we'll go through and show you what we were seeing after the initial balance. And so after the initial balance, we had the edge to break lower. So the highs were pretty strong already. We had the edge to break lower. Had a poor breakout trade. We didn't. It's not really a fade or a breakout. Just didn't look good either way. We had going with weakness, selling strength. We had the edge was not to close above today's high or yesterday's high. We still had an edge to close positive. So since the day's high and the close are basically the same thing, those kind of conflicted, canceled each other out. And so we just didn't see a whole lot of opportunity here. And that initial balance is small. We just don't get a whole lot of opportunity for trade location to base everything off of. And so we were just kind of on the sidelines waiting to kind of get a break to see what the energy was. We had a neutral tick. We had the Russell, which was absolutely weak. It basically within the first hour, I think, traded almost 10 handles down, almost broke their previous day's low, while the NASDAQ was ticking higher. And basically you can call the NASDAQ Apple. But I mean that's just been rocking like crazy. But we just were here, small balance, waiting for that break. So then when the break came higher, we basically saw this late in the day, and whenever those breaks come, whenever this range is that small, gapping higher, whenever we have a late break, it just kind of kills the sample size. And so we didn't have a great sample size to base everything on. And so we kind of noted, low sample size. Don't hold a whole lot of conviction to the edges, to the probabilities. We posted them just to kind of get a sense of something. You see you have a 0.19% sample size. 100% breaks highs. It was basically looking like we were most likely going to break and close above 52.5. And so basically what we were looking for was just kind of that continuation. We have the context. It's held yesterday's highs. It sort of broke new high prints. So all that context was there that the lows were in, that yesterday's range was going to hold. We're going to find some buyers the rest of the day and trade higher. A couple little keys that we're seeing is we had a 52.5 initial balance. We only saw an edge higher to 56, ratio range edge 56. So we weren't seeing a whole lot of movement higher. But again, kind of heading into that lunchtime, we were basically bullish, until the lows broke. And so when you get that kind of setup where the lows are right on the previous day's range, previous day's value area high or something, those a lot of times those can be a good sell stop. And so we didn't have any sample size when it broke lower, but in that context, once that value, that range gets rejected, you can find some sellers, and that's basically what happened. Is we came down here, doji came back down, hit the -10, hit the sell side volume. I think there was some Greece news or some European news or something about China, but anyways, we broke it, found the sellers. Breaking within range, this basically confirms everything. So this confirms a rejection of the value higher. And so basically what that does, obviously after the fact it's a little bit easier to recognize this. You get your -10, you try to get in short, stop at new highs. Had you done that, it would have worked out pretty good for you. Breakout trade, hold till the end of the day. But as we were breaking, we're getting oversold. We commented if you were long to try to look for a little bit of a bounce. A little bit of bounce came. Here came the FOMC minutes. We came back up, filled the single prints. If some of you that don't look at market profile, make sure you read up on it, kind of figure out how these profiles shape up, because that was to the tick, filled in the single print, filled in that range, and then drifted lower, made new lows. So especially after news events, we don't like to trade, and so this is kind of an emotional, news-driven market today, and so we just didn't find a whole lot of opportunity for us in our trading style. Tons of opportunity for other people, but we'll let them take these days today, and we'll try to get on something that we're more comfortable with, where we get a little bit better probabilities, where we get a little bit better vision. Today is just kind of a little bit tough with all the emotion in the market. So we came back down here, broke, saw this +10 come up here off the lows. We signaled that might be either the initiative buying, or if it takes out the bar lower. Let's zoom in on this chart a little bit. That could be a good buying opportunity. So we basically saw this next bar almost immediately takes out the previous bar. That kind of gives you a little warning sign. I think the Russell did it the next 5 minutes. We come back down here, tick it out, so that most likely means we're going to head to a little bit lower low. We're going to look to get long. And so here comes our next lower low. We get another -10. All right, so now here we get in long mode. All right, we were squawking our trades real time, what we're looking for. So now we're going to look to buy stop a new high print. And so ideally we'd like to see a candle more like this, where you get a nice long tail, buy stop at high, something like this doji back here, where you get a little bit tail. This setup wasn't very strong for us. We see not a whole lot of selling down on these candles. We see it up here. And so we basically thought, well, shoot, why not? I think we hit, pro below value area low. We were within kind of that previous day's range. Here's the lows yesterday, which barely held today. Just kept us right on getting an outside day. So then we buy stop this candle. Had a nice little initial spike off it. Came back down, closed. Kind of chowdered around in here. and so we punched down at break even. We lost commission on it, but we just didn't like how this chop was going. We like to see initial sort of energy and at least get a close above. When we don't get a close above that buy stop, we're going to try to shut it down. And so luckily we were able to get out, losing that commission, and then we ran lower again. And now this one's a little bit better of a candle to buy stop. It's that hammer, but we would have liked to see just a little bit more of a tail on there. And just when this market just kind of sits in this range, it just doesn't give us a whole lot of opportunity for that spike. Of course, this one ended up working, but that opportunity for us just wasn't there. We pulled the buy stop. We had it up. We pulled it. Got a nice little pop into close, and then some more volatility. So, overall we took that one trade, lost the money on it, but that's about it for opportunity-wise for us today. It's just one of those days. Sometimes the best trade is no trade, and for us today was just that. So, we don't want to deviate away from our plan or try to sway you guys one way or the other on how to trade these kind of days, but that was our trade. Once we broke lower, we didn't even have any kind of meaningful sample size. These kind of days just don't happen a whole lot, and so we kind of signaled about the lower end of the values in play. 42.5, 49.5 is a good place for stops. That was just based on that sell imbalance, and so that was about it for the day. Looking at tomorrow, this kind of setup actually has a little bit of a bullish tone heading into the next day, but then over the next couple of days it's a little bearish. So heading into options expiration, we could see a little bit more weakness heading into the end of the week. So gaps look okay to fade, especially up gaps. Down gaps don't look very good. We see a little bit of upside bullishness in the first hour. We see fading weakness going with strength. All right, pretty significant. If we do break range lowers, look to fade. If we do break range highers, look to go with. We see an edge to break today's lows, but an edge to close above it. So we might tick a little bit lower early and then close above it. We see an edge to close higher. So initially look for that one little head fake down. The shorts are probably licking their chops. They actually got I think they actually got a 90 point down close on the Dow, which was like the worst day of all the year. And so after getting hammered for the past year, they finally start to lick the chops. So they might start to get a little bit add to their shorts tomorrow morning, and then look to close higher. But again, everything can change in the morning. That's just sort of what the initial setup is. We ran our numbers on SPY, back tested at 10 years, and buying on close today and then exiting at the next day at close long, you have a 56% win rate, 1.29 profit factor. So it's a bullish setup when you bought today at close, held to the end of the day. But then when you close after the first 10 handle move, either up or down, you have a 39% win rate long, 0.83 profit factor. So it's actually a short setup over the next couple days. So basically overall we had to close the day at 42.25. So the edge is that we're going to close below 32.25 before we do 52.25. So just something to think about going forward. We're bullish in the OEX, so it's going to be an interesting day tomorrow. But anyways, thanks for coming along. Oh, we'll show you. Hold up, we'll show you the market tracks today. Just kind of show you what this kind of setup produced, and you can see it's pretty tight. Not a whole lot of deviation going on today. And this is what the tracks predicted. Obviously, we didn't even come close to falling that. So this was just one of those low probability, low standard deviation days where we just didn't want to take part in it. We just didn't have the edge today. So anyways, hopefully we'll get on it tomorrow for you guys. Good luck.